Welcome, everybody. Steven Sitkowski here. Glad to have you for this edition of Market Insights. I know you're all curious about this, and the ski resorts did open this weekend. So we went out there and did a little bit of skiing, which was pretty awesome. As I'm looking out, yeah, it looks like snow's probably coming down in the mountains. Here, we're getting a few little flakes, but always a fun time of year. Ushers in the holidays and everything that comes with that. So I hope you are heavy with anticipation, just like you are heavy with anticipation and hanging on the market insights and all that it has to offer. So let's do it. Quick reminder that everything I do here is for educational purposes only and not intended as investment advice. So let's move in the markets. Post-election rally stalled last week, kind of picking back up so far today. To be expected, stocks shoot up 5-6% a week. They're not going to stay there. Not typically. There'll be a little bit of a pullback and then hopefully a resumption. Tesla continues to rock. It was up 6% or so today. B of A raises its price target for the S&P 500 to 6,000, which is not much higher than where it is now. Let me do it just a quick. But at least it is a positive number. SP's at 58.97. What is significant is their price target's gone up. And that's for next year. So that's a good thing. 10-year Treasury's not doing a whole lot, hanging around 4.4. Ditto with oil, high 60s, no real movement there. What to watch this week? Not a particularly heavy news week. We had the home builder confidence number come out today, and it was a beat. So that's a good thing. Got housing starts, building permits tomorrow, not going to shake the market. Wednesday, some Fed speak, not going to move the market. Thursday, initial jobless claims, which come out every Thursday morning. That's something to watch. Philly Fed Manufacturing Index, that is something to watch. And leading economic indicators, still expected to be negative, but less negative. And then on Friday, we have the services and manufacturing PMI announcements. It's kind of a litmus test for the economy, and consumer sentiment comes out. So Thursday and Friday, worth watching the news. Last week's heat map, very unimpressive. It wasn't all losers. Some of the financials did well. Verizon, Netflix, Disney, AT&T, Apple, PG, Philip Morris, now the Altria Group, Chevron, 1-year heat map, very impressive, unless you're Intel, which I'm now doing covered calls on, or Nike. But a whole lot of green, NVIDIA up 182%. Microsoft, interestingly, for the year, only up this last 12 months, 10%. Apple, 20%. Amazon, 41%. Tesla, all that's happened in the last month, 46%. Walmart, 61%. Been a great, I'm doing covered calls on that. Costco, 63%. Market breadth, last week, we call this the internals. We like to look at the number of stocks hitting new highs versus new lows. On the New York Stock Exchange, 543 52-week highs compared to 147 new lows. It's awesome. The NASDAQ, about 2-to-1, 817 to 488. Great, we'll take it. The big winners. Well, I haven't been able to say this in forever. Disney. Disney had an earnings beat, some positive guidance. I guess some of their new movies are coming out, either expected to do well or are doing well. honestly, I don't follow them. But not that I don't, you know, like Disney movies, I do, but I don't look at them in terms of the stock. Palantir had a great week. Uh, they had a good earnings report. Tapestry, Schwab, Dexcom, Tyson's Food, Wynn Resorts, DaVita, Wells Fargo, doing covered calls on it, and Alliant Technology Group. So those were the winners for last week. Profit margins forecasted to move higher. That's a good thing. What is it that makes stock prices go up? Increase in profitability. Those margins are critical. As a result, investors are pouring money into equities this post-Trump election at the highest level in 11 years. Small caps expected to go higher. So fund managers are betting on a move in small cap stocks. Now, if you're going to be doing like the Russell 2000, you should know their largest holding, Super Microcomputer, which has gotten destroyed recently. But these are the top 10 holdings. Supermicro, MicroStrategy, Comfort Systems, Onto Innovation, Carvana, Fabrinet, Light and Wonder, no idea what that is. Weatherford, Abercrombie, FTAI, Aviation. Most of those probably never heard of. Sentiment is definitely up across the board from the perspective of investors. I mean, look at that. Wow. Inflation has been stubborn, but it has been going down. Just hasn't gone down recently. In fact, we've seen a little uptick in core inflation. Fear greed index, kind of neutral. A bit surprising that we wouldn't be more on the greed side. How much is Fed going to cut rates? Kind of latest and greatest. There is almost a 40% chance now that the Fed holds. I think I told you last week, I think it's 50-50. The economic data is so strong, I just don't know how they cut in the face of it without rekindling inflation, or at least the fear of that. But it's about 60-40. 60% in favor of a 25 basis point cut. Now we're down to 3 rate cuts for the year. We're up at 6 or 7. So that's a definite change. 1 year sector returns. So the S&P is up 30.62%. If you're trying to decide or determine how well you've performed, well, look at your returns for the last year. If they're up more than 30%, great. Less than that, you're underperforming. The best sectors for the last 12 months, financials now leads, followed by communication and technology, hot on the tail. Industrials and discretionary have produced slightly above overall market returns. Utilities a tick below. REITs definitely below. Staples, materials, energy. Notice that healthcare has moved lower than energy. They are now at the bottom of the rung. Healthcare has just been a real laggard, and I suspect with a potential revamping of the healthcare system, there could be a lot of uncertainty there. Let's take a look at the charts. Hope you had a good weekend. Here is the S&P 500. So it is definitely, this is a 6-month chart. That yellow line is a 50-day moving average. We definitely had a rollover from last week. We had the big Trump rally, as they call it, and then coming back down to earth. Today we're up a little bit. Can we forge higher highs? I don't know. Looks a little iffy right now. Toss of the coin. The MACD has just turned slightly red. The RSI is kind of rolled over on balance volume. Looks fine. I mean, there's nothing alarming about this, but there's nothing suggesting that another big surge is right around the corner. And the Qs, so 100 largest companies traded on the NASDAQ, so kind of tech heavy, big rollover here. And one of the things I've been watching is whether the Qs will honor their 50-day moving average. They did here. We've approached it and we're on an up day today, so far so good. And IWM, so Russell 2000, typically the squirreliest of the indexes that we look at. I mean, just big moves up and down. This is really a proxy for the economy. So we had the election. This thing has fallen off a lot. And now, like the S&P and the Qs, is having an update today. Let's take a look at our latest and greatest track record on our trade ideas of the week that we put out to Inner Circle folks. So as of the beginning of this year, we've now closed 103 trades. Average return per trade has been 17.8%. That's not for the year. That's not annualized. We're just netting out the winners and the losers. The average holding period, 16.6 days. Our win percentage, it's been 93.3%. So not bad, if we do say so ourselves. All right, well, thanks for hanging with me. I will see you again next week, undoubtedly, with another ski report. Hope you're all well. It'll be fun to watch, see what happens to the market this week, if it can kind of hang on and stabilize this little free fall that we saw for the last week. Only time will tell. I'll talk to you a week from now. Be safe, be blessed. Bye for now.